Lucid Motors, an up-and-coming premium electric vehicle manufacturer, will be competing with established brands such as Tesla, Porsche, and Ford Motors in the coming years. The anticipation for the stock is evident, both in the short and long term, as the company's first line of vehicles is expected to begin delivering to consumers very soon. Recently, the company received its first analyst price projection, which provided a highly bullish initial picture for the future of the company. In today's video, we take a look at what the next 5 years have in store for Lucid Inc. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. While Tesla is the most well-known luxury electric vehicle company, Lucid Motors, which has just formed a partnership with Capital 4 and the SPAC Churchill, is leading the charge in the race to become the road EV king. No doubt, Tesla has a stronghold on the EV sector for now. The upstart company announced future plans during a live show. As a result of the popularity among potential consumers and investors, it's worthwhile to consider what Lucid expects for the company in the coming years. Lucid Motors has a lot of potential. With a cast of all-star talents in their ranks, better technology, and vast finances, they want to dominate the EV sector. Even with luxury vehicles, their first market entry, the company will progressively grow into low-priced cars, SUVs, and renewable energy storage, among other potential ventures. Furthermore, other automakers may be interested in Lucid's technology because they lack the same skills or time frames to build their own, which might lead to lucrative collaborative arrangements for Lucid. After the expected completion of the CCIV merger on July 23, 2021, the stock price is now trading at $23.48. The stock rose as high as nearly $65 earlier this winter on the basis of investor excitement about the company's prospects, only to fall as low as $17 during the most recent market correction. Because of their volatility, SPACs are rarely the subject of analyst forecasts, as analysts prefer to wait until the business has completed the merger process and begun trading under its new ticker, rolling off the assembly line. Despite the fact that there are now no drivers seeing any Lucid EVs on the road, the company anticipates having vehicles on the road by 2022. Lucid Air, the company's first production model, will be assembled in the newly constructed Arizona plant in the second half of 2021, according to plans. Earlier this year, management announced that it had received over 11,000 reservations for the Lucid Air, with approximately 1,000 units of the luxury sedan expected to be delivered to customers in North America by the end of this year in 2021. Deliveries to customers in international markets are expected to begin in 2022. Lucid expects tremendous increase in manufacturing throughout the next 5 years, including the release in 2023 of the SUV Project Gravity. Lucid expects to sell around 48,000 vehicles by 2023 based on the estimated delivery of 36,000 Air models and 12,000 Project Gravity vehicles. By 2026, however, management anticipates that 134,000 deliveries of SUVs will surpass Air deliveries by approximately 42,000. Lucid expects to convert from solely selling premium vehicles to also supplying more economical versions, which it hopes to introduce around 2025 in a similar manner to Tesla. Sales of the more economical automobiles will increase from 7,000 units in 2025 to 75,000 units in 2026, assisting the firm realize its goal of selling 251,000 vehicles in 2026. Future financials. Management evidently anticipates substantial success in getting customers to jump into its driver's seats as it seeks to increase car deliveries from less than 1,000 in 2021 to 251,000 5 years later. Investors, on the other hand, are more likely to be concerned with the company's financial projections, which is where the rubber meets the road. Lucid plans to earn $97 million in revenue this year based on the assumption that it would sell around 1,000 vehicles this year. However, management anticipates that revenue will increase significantly next year as manufacturing ramps up and will continue to do so for the following 5 years after that. During the 5-year period from 2023 to 2026, the company is expected to achieve a stable gross profit of approximately 22% on average. In order to put this into context, remember that Tesla has recorded an average gross margin of 19.7% for the previous 5 years. It is not expected to become profitable on an EBITDA basis until 2024, on the other hand. If Lucid achieves its sales and earnings before interest, tax, depreciation, and amortization projections in 2026, it will generate an EBITDA margin of around 12.7%, which is comparably better from the 13% EBITDA margin recorded by Tesla on a trailing 12-month basis. As far as cash flow is concerned, Lucid intends to spend $1.9 billion on capital expenditures in 2023, the largest amount in the next 5 years, most likely in preparation for the production of its SUV, which is expected to begin that year. This will be the most significant expenditure in the next 5 years. In the following years, the expenditure on capital is expected to decrease, with the firm spending only $573 million on capital expenditure in 2026. Accordingly, Lucid anticipates generating free cash flow of $1.52 billion in 2026. In the event that company's revenues meet its forecast, the firm's cash flow margin of 6.7% will match that of Tesla's reports of the preceding 12 months. Conclusion. Let's get one thing straight regarding Lucid's chances. It's no surprise that investors are optimistic about Lucid's prospects after seeing management's estimates for the next 5 years. Does this indicate that EV investors should drive off with an investment and park the stock in their portfolios because management has such a positive outlook for the future? That's not the case. Upstart electric vehicle producers, as well as traditional automakers who are shifting gears and committing to more EV-heavy product portfolios, are all increasing the intensity of competition. Furthermore, the company will certainly experience certain bumps on the road in the next years. Problems that can make the company fail to fulfill its growth expectations, especially when the management has made the predicted financial statements public. Investors' portfolios are littered with examples of corporations who have made optimistic earnings estimates in order to attract investor interest, but have failed to meet or exceed their own expectations. Because of this, investors should exercise caution when accepting management's estimates at face value, assess an investment with prudence, and weigh the risks in proportion to their investment. Lucid will, without a doubt, play a role in the fight for electric vehicles. When compared to the other EV manufacturers, Lucid stands out because their battery technology is arguably better than their competitors, and they're also targeting a certain type of customer with their high-end electric vehicles, despite the fact that Tesla is not going away and is here to stay. However, Lucid will hold a role as well. For long-term investors, the stock of Lucid may prove to be a very promising investment. I love the Divine Angel comment. He believes that Lucid is focusing on perfection rather than jumping straight to the market. This reminds me of a company who has a similar approach, Apple. What are your thoughts? Could Lucid be the Apple of the EV industry? Let us know in the comments section. That should wrap things up for today. Keep in mind that subscription is still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.